This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your livestock roundup. And we saw a big technical breakdown take place over the past several sessions, which we are actually looking at as a buying opportunity, specifically in the live cattle contracts. We came into the week relatively bearish, but really kind of fell a lot harder and a lot faster than we thought. Talking about long liquidation being a risk, that certainly has played out over the past couple of sessions, but now with the June contract resting near 115, I think there's good value. Remember, price is what you pay, value is what you get. This 115 level represents a 50% retracement, or basically the middle of the range from those contract lows last April to the recent contract highs in March. If the bulls can defend this to wrap up the week, I think there's opportunity for this market to work higher. On the fundamental side of things, cash trade steady to slightly softer, 125 to 126 is what we're seeing in the South. So cash is not falling apart like the futures are. I would think this would offer support here going into next week's trade, but time will tell with that. Now, moving over to the feeder cattle, again, technical breakdown. This has been maybe a little bit more swifter of a move for the feeder cattle. Looking at August, 151.75 to 152.20 is really the pocket that we're looking at to step in and be potential buyers. This represents a 100-day moving average as well as the original breakout point in last March. If we can get down there, I think there's good value to the buy side. Probably be a little bit overdone on the sell side. Good opportunity for a short-term trade perhaps. Now, moving over and wrapping things up with the lean hog market. Lean hogs basically lock limit across the board here, not getting any momentum, and a lot of that on the back of China not stepping in on exports. This has been a very volatile market, and we've talked about if you want to be long the market, you have to be ready to take heat against you. This is exactly that heat we were talking about. We've seen basically the risk range of 90 to 100 for that June contract, breaking a little bit below that. If we can stabilize above 90 going into next week's trade, get a little bit more confirmation of a near-term bottom, I think there's opportunity for this market to work higher. The big level we're looking at below 90, 85 to 86. This is the contract highs going back to November, as well as the original breakout point here as of late. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.